Okay, Professor Jim Schultz here from my Finance 512 class. It is, let's see, it is Wednesday, December 3rd, 2014. I wanted to go ahead and bring you guys back in for another live trading session for me. I haven't done this in a while for you guys, and I'm about to put on a trade in oil. And so I thought I would go ahead and kind of walk through my thoughts in putting on this trade. I know that your projects are coming to a close and you guys only have a couple days left to trade. But hey, you never know. Maybe you can tail this trade, make some money, or lose less money, whatever position you happen to be in. And so let's go ahead and get started. So I'm looking at oil, and the first thing I want to do, as we've talked about in class kind of all semester, oil has been in an absolute free fall. And so if you're going to trade with the trend here, just looking at a basic 1-year daily chart, it's very obvious to see that this thing is just falling off the table, right? So again, if you're going to take my initial advice from a technical analysis standpoint, trading with the trend is always going to give you kind of a higher, a higher likelihood of success, because this is the direction the market wants to go. So there isn't really a whole lot of there's not a real good reason to trade against that. And so it's been challenging if you want to be short oil, in my opinion. It's been challenging to try to find a good entry point to get short, because you want to try to sell high on a relative basis. And so I'm going to kind of show you guys kind of how to do that today. And so, okay, so we got the 1-year daily chart open just to get a feel for the overall trend of the market. Okay, so what I'm going to do right now is I'm going to drill in. I'm going to look at a 30-day, 4-hour chart. This is one of my favorite time frames. I don't want to know that again. This is one of my favorite time frames to trade. I find the 4-hour bars to be very, very effective from a technical analysis standpoint. Okay, so what do we see? Well, again, you kind of see a downtrend happening, right? But the thing that caught my eye literally just 15 or 20 minutes ago is this guy right here. This is the candle this is a 4-hour candle, right? So this candle is set to close at about 1 o'clock exactly. And so it is not closed yet, so I'm not going to put this trade on until it closes. But it's a 4-hour candle, so most of this candle has already been decided. It's very, very, very unlikely that this thing is going to drastically change to a different shape or form in the next 45 minutes. And what do we see? If we go ahead, I'm just going to zoom in on this just for a second. What do we see? That's a pin bar. That's close. That's like a hybrid between a pin bar and a doji, but it's got enough characteristics for me to want to go ahead and pull the trigger on this trade, right? And so what do I see? So I'm going to auto zoom back out to what's going on. What do I see? A nice downtrend right here, right? And then what happened? The market tried to go higher, and it could not surpass this level. So I'm going to draw price level. I'm going to draw a nice little line right there, right? And I'm going to add a text note. And this is obviously, kind of short-term resistance, right? Oop, that's kind of big. So let's hang on a second. I want to move that over, but yeah. I haven't used the text note feature in a while in Thinkorswim. A lot of times I'll print off my charts and just write with my, just use my handwriting. And so I'm not going to fiddle around with that too much. That could take a really long time since I'm not that technologically savvy. So we know that says short-term resistance, so we'll go with that. So so what do I have? I have a downtrend, I have short-term resistance, and then I have a pin bar / doji forming right here, right? But here's the other piece of the puzzle that really solidified it for me, that I'm going to get short oil, assuming that this bar does not change drastically in the next 40 minutes, which again, I don't think it's going to. Let me go back to my pointer. I want to zoom in on this area right here. Okay, oh, there you go. Now you can see it. All right. So from this high down to this low, this is kind of the dominant swing that the market is operating within right now, right? These are, if we go ahead and if we put a price level on this bottom right here, this low of 63, boom. This is kind of the range within where the market is operating right now. Okay, so now What I'm going to add is something that I did not cover in class because we simply did not have enough time. But for those of you that have gone deeper in baby pips and kind of learned some additional things, I'm going to add a Fibonacci retracement analysis, some Fibonacci retracement levels to this swing. So since this is the dominant swing, I'm going to go ahead and fib from this high down to this low right here. Okay? And now I have customized you can customize your Fibonacci retracement levels, and the purpose of this video is not to show you guys how to do that. Definitely take a look at baby pips about Fibonacci retracements if this is something that you're interested in adding to your own trading. It is one of the most effective things that, it is one of the most effective tools in technical analysis that's out there in my opinion. So what I want to do is I'm gonna stretch this out a little bit more so we can see these levels a little bit more clearly. So I'm going to scroll down. Okay, so this is kind of, I'll even crunch it up a little. Okay, so this is the swing that we're operating within, right? Okay, in my opinion, the three most effective Fibonacci retracement levels are 61.8%, 70.8%, and 79%, with the most effective one being 70%, okay? So what happens is this. You're looking to get short. You have this downswing right here. You let the market come back up to you and then look to get short somewhere in this level, right? Now, honestly, I was not super interested anywhere in here just because I wasn't really watching oil. I was watching other things and all that kind of stuff. I don't trade oil a whole lot, but I've been trading it a little bit more frequently lately because of you guys, honestly. You guys have got me kind of excited about the oil markets, both for real money and for paper money. And so I've been watching it a lot more closely now, and I think that this is a pretty high probability, trade here. Okay, so I'm looking to get short on the close of this bar, and so it's going to end up being right around here, which is around the 62% level. I'm probably going to get short at the closing price of this bar. Sometimes I would put a limit sell order and get in right up here, right around 67.92. Which is the 70% Fibonacci level. Now here's what's really great about this trade, and I'm going to close the video with this, because I'm not going to actually put the trade on right now because the bar is not closed yet. But here's what's terrific about this trade. What price level am I targeting, and where would I put my stop if I was going to use a stop? Now I don't use stops, like I said, right? But in my opinion, this trade is still good until this high gets taken out. So until this high gets blown out, you're good to go. This trade is still live. This hypothesis is still intact. So until this thing gets above, what is that, about 69.50? I would probably even put it above 69.70 to give yourself even a little bit more room. So if you were going to use a stop, I would probably put it right up around here. So then you're looking at getting in at 67.30, getting out around 70. So you're looking to risk about $2.70 on the downside. If you're going to do that, then I would go ahead and I would absolutely target this low as your price target. At least, maybe even lower, maybe 63, maybe 62, maybe even the 60 handle if you want to be really aggressive. So that's over $4 on the upside. So you're looking to make $4, risking $2.70. That's a really good return per unit of risk, right? And so that would be one way to approach this trade. I'm going to tell you guys right now, I'm going to look a little bit more short term on this trade. I'm going to look to get short on the close of this candle. So let's say it closes right where it is at 67.30. I'm only going to look to take out maybe, I don't know, maybe 25 or 35 cents out of this trade. Trading without stops, I'm a lot more aggressive in the sense that I take my profits off a lot more quickly. And so I think that you're in a high probability situation and that you get short at 67.30 and then you target maybe the 67 handle and I'll be looking for about a 30-cent winner here, and that would be it. So here we go. Here's another live trading session from what I'm looking to do today, and hopefully you guys found this to be useful.